Thank you.
I want us to drill down a little bit. So, as you are aware, I have a diverse clientele, right? Some of them are US citizens, some of them foreign nationals. And as you may know, even with foreign nationals, there are three levels, right? Naturalized citizens, all US persons fall into two groups: green card holders or naturalized citizens, and non US individuals, those who don't have green card. Now, working with them, there is a lot of misconceptions about mortgages, whether they can even get a mortgage here in the US.
Mm-hmm.
Now that I have you on this call, I would love for you to take us through the process. We will split it into two: US persons and non US persons. What are some of the myths that you've heard, and what are some of the programs, and even if it's possible for them to even get a mortgage here in the United States, as long as they get pre approved to
Sure.
get
Yeah,
a
they got to get pre-approved. That's the important part.
right.
So, we talk about this. There's really a couple things. So let's talk about people that are here in the United States without a green card. They're going to fall in, even that group is going to fall into a couple categories. So
Okay.
again, people here with no green card, no permanent resident alien card, also known as. Some people are here on a work permit. So
True.
if you are here on a legitimate, valid work permit, that's a workable situation for us. And Fannie Mae actually will lend to people that are here on a valid work permit.
I
So that's
see.
an important distinction. Now, the next group of folks that wouldn't necessarily have a permanent resident alien card or a green card as it's known would be folks that have an ITIN number, which is
Oh,
a I actually don't know why I'm blanking on that. Oh, individual taxpayer identification number. So also known as an ITIN. So individual taxpayer identification number. Now, people that are here without a green card could go to the IRS. Let's say
okay.
they want to work, they can go to the IRS and apply for an ITIN number. And they'll get that ITIN number. And there are loan programs that are available for folks that have that ITIN number.
Okay.
Those programs, though, are a little limited. We could talk about that. And there's some challenges there to lending in ITIN. But ITIN lending is available here in the United States.
Okay.
And it does require a handful of things, which I guess I can get into. You okay with that?
That's fine. Go.
Perfect. So with the ITIN here, again, no green card, but they have their ITIN number. The biggest challenges that they're going to face is the establishment of credit. So they do need to have some sort of credit established. It is possible to go out and have credit established, even though you're not a citizen. If you have an ITIN number, many people can get credit cards, car loans. Typically, what you'll find is the smaller community banks will
Okay.
make those types of things available. On
Okay.
a credit card basis, Patrick, some banks will say, hey, we'll give you $300. We'll give you a credit card with a $300 limit. It's called a
Right.
secured credit card. It's
Correct.
fine.
Okay.
It still builds credit for you,
Yeah.
which is perfect. The other big challenge that we see with folks who want to get money for a house is savings. So they do need to have a savings account somewhere. Cash in the mortgage lending business is a dirty word. They just don't like cash. So if you have the ability to establish a checking account, a savings account, really, really important. Your long goal is to go buy a house. So the
Okay.
things we see hold people back, they don't work on getting credit because they don't think they can get credit. And keep in mind, some of these small community banks will actually make a car loan to you. It's relatively easy to get some sort of car
Okay.
loan, even with an ITIN number. So secured we don't necessarily like recommending some of the big banks, but I think Bank of America even does provide credit cards for folks with
Okay.
ITIN numbers.
I see. Okay. I didn't know that. Okay.
Yeah, so those are going to be the challenges, and then of course, we about who's those folks. There is, as challenges are concerned, there's definitely a higher requirement for down payment. With our company, we're about 10% down, so
Okay.
that's definitely than your traditional programs
Right.
available through Fannie Mae or Freddie Mac.
Okay.
There are some community banks that will offer a little bit less down. The challenge that some of those banks have is because of the need, they're kind of overwhelmed. And so the customer service level, I'm not taking anything away from any of those banks that offer those programs. I think they're great, but at the same time, there's such a high need for that. The feedback we get from clients is that just the customer service level is not where it should be.
Okay, that makes sense. So let's stay on the challenges for a second. So from what I'm hearing, right, we are talking about being able to acquire a mortgage, right? Now, let's say, for instance, a non-U.S. citizen, a foreign national, was able to get the ITIN number. They've been visiting the country, for some time, so they've been able to establish some credit. Going to the banks to get a savings or a checking account. They've probably purchased, like a vehicle, established their credit. Now they want to buy a home. Does their status affect the rate they will get compared to, let's say, a U.S. citizen or a naturalized citizen like me?
Yeah, it's definitely going to have an impact on the interest rate. The loans that somebody with a green card, permanent resident alien card, or naturalized citizen can get, they can go to get a conventional loan or an FHA loans. All for those loans comes out of Wall Street. And how do I say this? The easy way to explain it, the money's cheaper because we can go get it in bulk from Wall Street. When a bank or a lending institution creates a program that can't be sold to Fannie Mae or Freddie Mac or endorsed with FHA, when we create a product for that, the loan itself can't easily be sold. So if I'm ABC Bank on the corner and I say, hey, I want to create a product for folks that have an ITIN number, we're going to ask for 10% down. Once I make that loan's a little harder to sell on the market. So as a bank, I have to be committed in a long-term position to keep that loan. So because of that, I have to ask for a higher rate of interest. There's risk involved with this loan. I can't move it as much as I'd like to. So the short answer, that's very technical and I apologize. The short answer is yes, the rates are higher for these loans, primarily because the loans are what they call portfolio loans. So they're loans that are basically just going to be put on the lender's shelf and they're just going to hang on to them.
Okay. So with that said, right, as you know, I'm also an investor. Buying an investment property compared to buying your primary residence, usually the interest rates do differ, right? Because for investment property, on average, you are adding on maybe between 1% to 2%, right?
Sure.
Now, does the same apply to the foreign nationals?
Yeah, so we got, and I want to make a clear distinction too, because you mentioned foreign nationals a couple times. There is some lending out there specific to foreign nationals. In our world, the foreign national is somebody who is a citizen of another country. They work in that other country, but they visit here frequently. Maybe they've got family here. Maybe their job that they have in Europe or Saudi Arabia or whatever brings them here to the United States. And they want to invest in a piece of property. Maybe it's a second home because they're sick of being in a hotel when they're visiting their parents or whatever, their siblings. They can get some lending as a foreign national. That's a little bit different type of lending. Now, folks that are here on an ITIN, as an example, they can invest in real estate. We do provide a cash flow only program for people with an ITIN number. So what is that? That means I will help somebody who is not a citizen, not a permanent resident alien, but here with an ITIN number. If they want to take some of the money they're making and invest in real estate, we'll actually qualify that loan based on the rental income coming in on the property. We don't look at their paycheck stubs. We don't look at their tax returns. So that loan, yes, you made a great point, Patrick. If you're a U.S. citizen and you're buying your own home, you're going to do that, today, and we'll make it September 5th. But today, you're going to do that in the 6s. If you're buying investment property today, you're going to do that in the 7s. Now, if you're an ITIN borrower, you're probably going to buy your own home somewhere in the 7s, And if you're
Okay.
looking for investment property, you could be in the eights.
Okay.
So figure another percentage above.
So it's interesting you end the way you did, right? And I think this also helps me in clarifying, much more because I have clients who are foreign nationals who live outside the states but visit frequently. So I have one particular client in mind. He's always in Chicago almost every other month, right? And he usually stays in hotels. He's
Right.
planning on purchasing a home, right? I also have another client who visits the States at least every 3 or 6 months, right? He is trying to, and he's also an investor in other countries, including his current home, right? He wants to start investing here in the United States. So, to your point initially, can we touch on those type of clients also to see, okay, what programs are available to them? Challenges come with those programs? What are some of the requirements? Because these are some of the questions they've been asking me. So you'll be able to help me answer some of the questions for them.
Yeah, so this answer then specifically is for foreign nationals, which we've established are folks that actually permanently reside outside of the United
Correct.
States.
Yes.
So we do have programs for them to buy second homes and investment properties here in
Okay.
the United States. The one thing interesting about a foreign national is that the down payment requirement for these are actually a lot higher than an ITIN. Typically a lender they could want as much as 30 or 35% down.
Yeah.
So it's definitely a lot more expensive from a down payment standpoint, but the programs are there, they're available. It's just because the client lives in another country, and if there's a default in any way, it's probably more difficult to chase them down in another country. So having a better equity position as a lender is really key in those clients. Now, the products that are available, actually, I've got some relatively aggressive products that are available, 7-year ARMs and things of that
Okay.
nature, that maybe even an interest only option on a 7-year ARM or a
Nice.
5-year ARM for the foreign nationals.
Okay. So you did mention right? Can you to those folks that don't know what is?
Oh yeah, no, that's great. Okay, so there's with mortgages, you're either going to have a 30-year fixed or a 15-year fixed traditionally,
Mhm.
and that means the rate's just fixed through the entire term. An ARM stands for an adjustable rate mortgage, which means that if somebody says to you as a consumer, "Hey, I have a great 5-year ARM rate," what they're saying is that initial interest rate is going to be fixed for the first 5 years
Yeah.
or fixed for the first 7 years. So you should get a little bit lower interest rate if you're talking about an ARM or an adjustable rate mortgage.
Okay.
You should be able to do that. We've been in an interesting time where we've been in what they call an inverted yield curve. And all that means is that the short term rates actually have a higher return than the long term rates. So it's ARMs haven't been as attractive as we move into a recessionary cycle where the Federal Reserve is lowering interest rates. ARMs will become more attractive again.
Okay. Okay. Now, thinking about all this, right? And I want us to go back a little bit. So, for those foreign nationals, I want to stay on them for a second. For the foreign nationals, let's talk about the interest rates.
Mhm.
How, even though their down payment is going to be slightly higher than an individual who lives here states, whether they are U.S. persons or not. You did explain that non-U.S. persons that live here, their rates are going to be higher than U.S. persons.
Mhm.
How about the foreign nationals?
Yeah, the foreign nationals, even though they have that significant down payment, are probably going to be in the higher side for the interest rates.
Okay.
Second home, I would speculate right now, second home is probably pricing, so even on a 5 or 7 year ARM, probably
Okay.
pricing somewhere in the high sevens. If you get
Okay.
investment property, it's going to be probably 8% for those foreign nationals.
Okay. 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 That makes sense. Now, I know we hinted on risk, right? Especially on the lender side. Some of the questions that I've also received from the foreign nationals, especially, okay, I'm a foreign national, compared to countries, right? Buying real estate, it's on a lease term, right? So
Oh,
maybe
yeah.
you are supposed to own it for about 99 years or 100 years or 50 years.
Yeah.
Can you touch on that for me? Keep telling them that in the States, if you buy a home, you own it, regardless,
Sure.
of what is probably going on, how you plan your estate, and the next generations to own it. So I would like you to talk a little bit more about such concerns.
Sure. Sure. We actually have a little bit of that here in the United States. I'm not sure if you knew, but like in the state of Hawaii, Hawaii
Okay.
owns quite a bit of the land there.
I didn't
And
know that.
yeah, most of the property there is on some sort of land lease,
Okay.
similar to what these other countries are. So what it basically means is that look, the state of Hawaii has said the house, let's say you bought a house and house is actually the ground underneath is owned by the state of Hawaii. However,
Mhm.
they have a 99-year lease to the owner of the property. And at the end of the 99 years, sure, they could revoke the lease, but there's no reason for them to do that. They will probably extend it for another 99 years.
Okay.
And most countries would do the same type of thing, assumedly, again, I can't speak for regime changes and specific politics, but land use in general, the 99-year is they're just going to extend it and you still have ownership rights to that property. You can do things to the property within whatever the village zoning is and the municipality
Okay.
zoning. You want to put an addition on there, you can do that. You technically don't own the land, but you pretty much own the use of the land.
Okay. And this is in Hawaii, right?
Yeah, Hawaii, they've got a lot of land leases
Okay.
in there, a lot of land leases in the state of Hawaii.
So compared to the other, 49 states,
Mhm.
what's the difference?
Yeah, in the other 49, dirt is yours. So
Okay.
that dirt, everything in that lot is yours. There's nothing to worry about. Yeah, it's 100% yours. Now, there is something called eminent, which a village, a city, a state can come by. House was on a busy road and they decided that they just wanted to add 2 more lanes. They can issue something called eminent domain, take the front half of your yard, put those 2 lanes in the road right across it. They have to pay you for it. But
Yep.
that's about the only circumstance that you're going to see a government come in and say, hey, we're taking your property. Other than that, here in the United States, you own it. You do what you want with it. You mentioned generational wealth. You can leave it to your kids and that type of thing.
All right. Okay. Great.